Piers Hillier of LVAM Asset Management is overweight on the banks. Piers, why?
I think we think that you've got a short-term funding issue, and I think you saw what happens to banks when you get intervention last week by central banks. And we saw liquidity put back into the system, which removes that short-term fear. But we've come a long way from 2008. I think everyone's saying, oh, it's 2008 all over again. The fact of the matter is we've raised 110 billion of equity into the banking system over the last year. Yes, there are still some structural problems. Yes, there's probably some write-downs still to come on Greece. I said that last time, and I'll probably say it next time I come on. But the fact of the matter is, though, is that I suppose we who work in financial markets here, we get regular kicking bankers, bash bankers and everything else. There's a time for us to actually sort of push back to the politicians, say, look, some of the problem lies with you, and the evidence really was there last week. Central bankers responded, risk assets responded. We did nothing over the weekend, politicians slowing sclerosis, and what happens? We see markets down very sharply yesterday. This is a short-term political problem, and you need consistent action by politicians to do something about it.
You're saying it's a political problem, but is it a short-term problem?
No, there's a structural problem, but you work your way out of it. And I think you contrast, the UK, where we have equally as significant a debt problem as some countries in Europe who are in the spotlight today. But the fact of the matter is we've taken some steps forward. Everyone complains here, oh, and GDP growth is anemic. It's hardly surprising it's anemic. In 2 years, we put up VAT by 5% from 15 to 20%. We put up income tax since April this year, and we've encouraged people to be responsible in their leverage.
People from spending, then
but we're retiring 220 million of debt. You can't have everything.
All right, you can't
and so
have everything.
We've been responsible, and hey presto, our bond market looks very strong. I still don't understand why you want to buy...
You're buying gilt?
Well, no, we would. Well, I mean, we have a gilt exposure here because you do in a balanced portfolio. But when you've got negative real yields on gilt for 10 years, it kind of feels to me like people who wanted to invest, as they were saying to me, in technology stocks in 1999. Doesn't matter. You've got to get into the growth story. It doesn't matter. You've got to get into the safety area. And to me, I come back to what Buffett says all the time: be greedy when others are fearful, and be fearful when others are greedy. Now, I'd be fearful in gold here. I think everyone's very positive on gold. There's a great gold story out there.
You don't see gold as a haven.
And I came on last time and I told the Italian government to sell gold. Well, I tell them again today, you should be selling some gold here. You've got 2,700 tonnes of the stuff. You've got a short-term problem, sell some gold. At $1,800 an ounce, you should be happy to let some go here. Yes, you might not get the top, and yes, it may go further, but you've done better than Gordon Brown, who sold it at $250.
Well, Piers, you talk about these problems, deep structural problems. Yes, there could be more write-downs. Yes, there are funding problems. You speak as though these problems are not particularly serious. Is there a sense that investors are perhaps not becoming immune, but getting used to issues and just shrugging them off and saying, well, I'm going to invest anyway?
Well, I think, let's remind ourselves, I feel like it's a day of bashing politicians, and I'm happy to give it another go, because the fact of the matter is that a lot of European politicians have driven us into this point, because they basically said, we don't like you being in risk assets, so they got us all out of equities, they've reduced our exposure to credit by asking us to take more charges for solvency purposes and not take charges against government debt. So, I worked for German financial organisations 5 years ago who were very happy to sell bunds and buy Greek bonds or buy Italian bonds on a yield round trip, and felt very clever doing that because they're government bonds, we don't have to take a capital provision against it, and it looked like really clever financing. Well, the goose is coming home to roost now, and the fact of the matter is the politicians have to act in a coordinated fashion and tackle the problem.
But I just want to ask you about the specifics of what you're investing in. You're saying that the concerns over the banks are not justified right now, despite the fact that share prices have been falling. There do seem to be genuine concerns about funding. I mean, we're seeing that in the interbank lending markets, aren't we? And the fact that the ECB would coordinate on such a scale with other central banks to afford these European banks dollar funding, that reassures you, but is that not also a cause for concern?
It means we understand the need to respond when we start to act irrationally in financial systems. Part of the reason why we got into the crisis in Lehman is that central bankers didn't perceive there was to be a significant problem until we hit the wall. This time they're responding earlier to prevent that scenario happening. The fact of the matter is that we're talking about a short-term funding position. If you look, yes, there is a slight raised stress in overnight lending. Yeah. But if you look back to where we were in 2008, we're nowhere near that kind of problem. If you look at where we've seen extension of term funding, which has mitigated some of the I mean, we had huge reliance on wholesale funding, and we had massive leverage in bank balance sheets. Well, we've been deleveraging banks now for 2.5 years. Yes, there's still still probably over-levered where they should be. Yes, there's still over-reliance on wholesale funding. Yes, there's still over-reliance on US money markets to provide liquidity to Europe, which seems irrational. And so bankers, central banks saying, look, stop being irrational. We will provide the liquidity that's needed. The same way the Swiss National Bank have stepped in and said, the value of the Swiss franc is too much. We'll just keep printing them until you've got enough of what you want as a safe haven.
Is it irrational if it's based on figures? The figures speak for themselves if these banks are heavily exposed to sovereign debt, and many investors are saying, look, we don't, there are more write-downs to come, and quite frankly, we don't believe that what you say is on your balance sheet is actually the case. Then it's not irrational, is it?
Well, it's a question of have you got performing or non-performing loans. Now, with interest rates where they are, you haven't had the classic problem into a crisis of major non-performing loans and having to take write-downs. The haircut effectively is coming in government bonds and in peripheral government bonds. Let's turn to Ireland. Only 2.5 months ago, Irish two-year yields were 25%. They're 8. It's still 8. It's still a big number. Let's be absolutely clear about that. But the fact of the matter is that action is being taken. So, yes, Greece is a problem. Yes, Italy needs to do something. Berlusconi and Tremonti need to sit down and basically agree on a common course of action, and you'll get rid of the short-term crisis that's of a perception in Italy. Italy didn't jump on the bandwagon and overlever themselves. They've always had a high debt to GDP ratio.
Are you buying shares in Italian banks?
We have some exposure to Italian banks. We see value structurally there. Italy's problem in some ways is that Spain uses Latin America to provide some relatively cheap funding into its finance sector. Italy was using Libya. Unfortunately, we know what happened in Libya, and the short-term benefit that they've had from that has diminished. So we step in as a central coordination in Europe to tackle a short-term problem.
Right. Piers Hillier, Chief Investment Officer at LV Asset Management. Thanks again for joining us.
Pleasure.